We're half an hour away from the open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Droulers with Avril Hong.
Our top stories. Korean investigators focusing on a bird strike and landing gear failure as they examine potential causes of the deadliest passenger jet crash of 2024.
We look at Jimmy Carter's lasting impact on US-China relations after the former president's death at the age of 100.
And Asian stocks snapping a 5-day rally amid slim holiday season trading. The regional stock benchmark looking to defend its 8% gain this year.
Well, Avril, I guess we had the Santa Claus rally, but Christmas is been and gone, and so you actually are seeing stocks slip into the end of the year. You just mentioned we're snapping that 5-day advance, but actually it's a little bit unsurprising given we had that trading activity on Friday. We saw Wall Street closing in the red. US futures are fairly steady there. You're seeing around a 0.2% drop so far for the broader benchmark, being led by those declines that we see, particularly in Japan this morning, off more than 0.5%. So tech is sort of feeling the brunt of some of this. Again, tracking what we had on Friday, the Nasdaq dropping more than 1% to end the day. Slim trading volumes, of course, to note, and then that kind of exacerbates the volatility in either direction. You're not going to really see too much conviction coming through these markets either as we close out 2024. But actually, just take a look at what's sort of the broader term trend over the course of the past 12 months. And actually, Asian equities are still going to end on a high note. If you take a look at this terminal chart, the moves that we've seen over the course of this year. So the line in white there is the MSCI Asia Pacific Index. You can see gains, yes, of around 8%. Still, though, really trailing the S&P 500. That's the line in blue, up more than 25% to end the year. Of course, part of this has really been dominated by what are the real laggards. We saw the Kospi, for instance, declining more than 20% this year. Real losses there. The worst year actually going back to 2022. But where we did actually see some gains was in the China markets. And if you take a look how we're setting up for pre-trading this morning, we could see perhaps some optimism coming through into corners of the markets. We are setting up for more weakness, again, sort of trailing or tracking what we're seeing more at a higher level today. But still, consumer stocks, perhaps one of the key areas to watch, given you've got now perhaps this directive. Let's start to give direct cash again to residents in China.
Yeah, I mean, Belle, I think we're watching out to see whether that figures into the trading session, and a couple of other things we're watching in the Greater China region as well, following a pretty solid week for Chinese stocks, where the Shanghai Com, I think, clocked gains of about 1% for the week. And much of this came from the I suppose, gains in these Chinese stocks listed in Hong Kong. They were up for about 2.5% on the HSCI for the week, and this is coming against the backdrop of us keeping a close watch on the PBOC that's set to keep the Yuan fix steady. Of course, we're also going to be raking through how the renminbi has turned up as a bit of collateral damage with China trying to support the stock markets. Speaking of, we have a couple of trading debuts today. Air China Cargo, that's on the mainland, and in Hong Kong, Xunfei Healthcare as well as InnoScience, and these are, I suppose, part of firms that have been helping to boost Hong Kong's IPO pipeline, so that trend is continuing there. For InnoScience, this is, of course, the chip material maker, and this comes after pricing at the low end of the range, following that retail offer that was about 3 times subscribed. A couple of other data points as well for the month of November that are set for release today, including Hong Kong imports, exports. That's expected to rise at a faster pace than the prior month. Also, watching out for Macau hotel occupancy rates, Belle.
All right, to our top story now, Avril. And South Korea's acting president has asked the Transport Ministry to conduct aviation safety checks. That's after Sunday's Jeju air crash that killed 179 people. Shares with the carrier we've seen this morning opening in Seoul to the downside. But let's bring in our Asia transport reporter, Danny Lee, joining us. And Danny, there has been some transportation briefing taking place. We know that Korea says they're checking whether the black box of the Jeju plane can be analysed. But bring us up to speed now that the investigation is several hours underway. What's the focus at this point in time?
Yeah, investigators will be focusing primarily on what we've heard so far is the actual lead up to the crash. We heard from the authorities that there was a bird strike in the minutes before this crash landing, essentially, and there were warnings from the airport to the pilots of the plane about the risks of bird strikes. And so the unfolding moments after that, did this bird strike in particular have an effect on the plane's handling? What impact did that have on the pilots? And that we saw some spectacular video shown of the plane doing subsequently a high-speed belly landing on the runway, but landing too fast for what was a short runway ultimately, and crashing into the end of the runway on an embankment. And so with that, the landing gear not being deployed, was there an issue, a malfunction with the landing gear or anything else on that plane which prevented a normal landing and the potential mindset of the pilots who would have been operating the flight overnight and potentially for up to 12 hours at least. So there's a lot of things that the investigators need to be diving into, and though they're keeping an open mind on all other possibilities, as you said at the top, the kind of reaction we've seen from South Korean officials in particular, clearly there'll be a lot of scrutiny, as is always going to be the case, just to make sure things are up to speed, up to check as normal in terms of what should be a very safe form of transportation.
Danny, this latest incident coming after a spate of aviation incidents this past year. Put things in context for us.
Yeah, I mean, it's unfortunate that this crash, which killed 179 people, does make it the worst civil aviation disaster in South Korea, and it exceeds the previous previous event, which is over 20 years ago. So it's quite unfortunate for this to be reached, but at the same time, it does speak to how safe aviation is more broadly, particularly in somewhere like South Korea, but around the world. The fact that in 2023 we saw very few accidents, and particularly no major large civil aviation airliners crashing. Yes, we've had a number of events in 2024, but on the whole, this is a small blot on what is a very, very safe form of transportation, particularly with this type of aircraft, this Boeing 737-800, 4,000 of these aircraft flying around the world, that this has very few issues overall.
Just briefly, Danny, can you put in context as well the reporting we had from Yonhap, local media in Korea this morning, saying that a separate Jeju Air flight had also had to return after takeoff over a similar landing gear issue. Is there any sort of connection here that we need to be looking at?
I think it's too early to say whether this particular issue this morning, Yonhap, the South Korean news agency, reporting that another Jeju Air plane of the same type had a landing gear issue or malfunction. Clearly, there'll be a lot more scrutiny on Jeju Air in the aftermath of this, whether there'll be other events that will be highlighted on in the coming days and weeks, which is inevitable. But it's too early to say whether there is a connection, but clearly a lot more scrutiny on the airline after this accident.
Indeed, and we're watching as these investigations continue. Danny Lee, for us there, our Asia transport reporter. Now, former U.S. President Jimmy Carter has died at his home in Georgia, aged 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office that faced challenges, including soaring inflation and a hostage crisis in Iran. For more, let's bring in Bloomberg's David Weston in New York. David, obviously this was a presidency whose tenure was characterized by a number of challenges. What sort of legacy, though, does Jimmy Carter leave behind?
Well, as you say, we tend to think of it in terms of the stagflation we had, high inflation in the United States and stagnant economy, and also the Iranian hostage crisis. And there were various foreign policy successes, but one thing I think we may tend to overlook was his substantial role in the normalization of relations between the United States and China. As you know so well, President Richard Nixon and then President Ford had moved toward rapprochement with the People's Republic of China, but there were not normalized relations at that point. And when Jimmy Carter came to office, it was far from certain that the United States would continue on that path. In fact, within his administration, there were real disputes about whether they wanted to get more comfortable with China or not. And President Carter himself came in really not entirely trusting the PRC, but over time he decided that that was the route to go. And so they had secret negotiations with Deng Xiaoping, and they normalized relations. So they actually exchanged ambassadors and embassies, ultimately with Deng Xiaoping coming on a state visit to Jimmy Carter in Washington. So it was a major foreign policy change, really changed the entire direction geopolitically of the United States that started with President Nixon, but really Jimmy Carter made a critical step forward.
What about changing the sort of policy direction toward the Middle East as well? Because he's someone who's very well known, of course, for brokering a peace accord between Israel and Egypt.
Well, the Camp David Accords, yes, he came in. Now, again, that was a little bit on the heels of what Henry Kissinger had done after the war that broke out. But he really carried that forward. He spent 13 days at Camp David, the presidential retreat, with the leaders involved, Menachem Begin for Israel and Yasser Arafat for the Palestinians. And he brokered the Camp David Accords that really gave up territory, Israel giving back up territory to the Arab nations. And it didn't bring us peace, as we know so well now, but it certainly moved us in that direction. It was a major breakthrough in the Middle East.
Jimmy Carter is someone who's spoken about certain, even just down to ordering one more plane, for instance, that could have tipped the balance in his favour for a second re-election. Of course, he was unsuccessful in that bid, losing by a landslide. But what about the work that he did in his post-presidency years?
Well, he probably was the most respected, even revered ex-president the United States has had. Now, he had a longer time to do it, but also he really devoted himself going around the world, really policing elections, really promoting democracy. He was a very big human rights advocate. He also did an awful lot of work with the poor. As you know, he received the Nobel Peace Prize for his work after he'd left being president. But come back to China for a moment. It wasn't just there. He visited China quite a few times and maintained relations there. And really up into the very last years of his life, he was writing and was outspoken about his concerns about increasing tensions to the United States and China, really calling on the two sides to get back together. He wrote at one point, "I'm concerned that what's going on from the two sides, both the United States and China, is moving back to what we tried to avoid with Deng Xiaoping when we normalized relations." So he was a very active advocate for better, closer relations between the United States and China right up to the end of his life.
Yeah, a very significant legacy. Well, thanks so much for taking us through some parts of it there. That was Bloomberg's David Weston in New York. And still ahead, we're going to be looking at how China's bid to revive its stock market has made the yuan an unintended casualty, with record dividend payouts leading the outflows. And we're counting down, of course, the trade opens in Shanghai, Shenzhen, Hong Kong. Looking ahead to a little bit of weakness there in futures, but we do have the opens at the bottom of this hour. You're watching The China Show.
Welcome back. You're watching The China Show. And of course, today among our top stories, we've really been tracking the continuing investigation following the deadliest crash that South Korea has seen in its history. We're since learning that South Korea's transport ministry official has been saying in a briefing that the country is in talks with Boeing as well as the engine producers amid the investigation. And of course, this is coming against the backdrop of the bird strike that has really come under scrutiny, given what we're trying to find out a bit more of following this aircraft incident that we've seen in South Korea, Belle.
Yeah, and Avril, actually on that, we've just had also at this briefing, South Korea saying that they're investigating the cause of another Jeju airplane issue. This follows what we had with local media reporting this morning from Yonhap saying that another Jeju air flight returned after takeoff over a similar landing gear issue. But that is the latest on the developments there in Korea. We're also tracking what's happening with the Yuan fix this morning, because we've actually seen it coming in more than 1,000 pips stronger than the estimate. So the reading there, 718.89 per US US dollar. The estimate had been for 729.67. The yuan, of course, one of the big topics that we've got for the show today, given there's also some unintended consequences that we're seeing of these efforts to try and prop up local stock markets in China, the dividend payouts and the pressure that that's having on the local currency. So we'll get to those details in a moment. But in the meantime as well, taking a look at what the central government, Avril, is urging for local authorities.
Absolutely. It's urging local authorities to offer handouts to people struggling with the cost of living. And I suppose this sort of fits into these fiscal measures potentially that Chinese authorities are coming up with, although some of these handouts and support measures are not that unusual. Our China correspondent MIM Low joins us now for more from Hong Kong. MIM, put into context for us what we're seeing from Chinese authorities and what they're telling local governments to do.
Yeah, I think we should see this as a positive sign, the fact that we could expect more local governments to give cash handouts to people ahead of both the New Year and the Chinese New Year holiday that is taking place in late January. And as we all know, the Lunar New Year is a very important festival in China. It's going to be a major travel season. People are going to go back to their hometowns. They're expected to spend a lot of money buying gifts for family members. But again, what is not clear at this point is how big a scale of these handouts, because according to the Ministry of Civil Affairs, they're encouraging local governments with the means to do so to set up a system to temporarily subsidize prices and to link social assistance to these price levels. Now, the last time China had handed out cash to the extreme poor was ahead of the October 1st National Day holiday. That was quite an unusual move. But this time, again, how many people are going to receive these handouts? How much of a subsidy are they going to get? That is the big question. But we have heard from economists again and again that these handouts are not going to be enough for long-term recovery of confidence, because for that, you really need people to feel that their income is going to increase, that their employment prospects are improving. And for that to happen, you need business confidence to improve so that they can pay more salaries and hire more people.
In terms of the eco data this week, so we've got the PMI figures and we're also expecting some sort of announcement around RRR. Could we get some sort of reduction, do you think, by the end of the year?
Well, we only have, one day left to the end of the year. It's not clear at this point, but it's been well telegraphed. We know the PBOC governor had said that he sees more room for cuts this year, and we did hear that being reiterated over the weekend on the party's newspaper, the People's Daily. PBOC Governor Pan Gongsheng saying there's more room to cut because currently China's average deposit reserve ratio is 6.6%, which he said is still higher than most major central banks. And we have also heard from the Central Economic Work Conference, the government pledging a moderately loose monetary policy. So we can expect more support, whether it's coming this year or perhaps early next year is the big question. Of course, this comes against that backdrop of the other big priority for the PBOC, which is to protect the value of the yuan, ensure its stability. It's been really setting the fix below that ceiling of 7.3 yuan per dollar amid the threat of tariffs from Trump. And we continue to see that yield onshore and offshore continue to widen in the past few weeks, and possibly in the next few weeks as well.
That's our China correspondent there, MIM Low. And turning to the US now, because President-elect Donald Trump has thrust himself into the high-stakes fight over the fate of TikTok in the US. He's urging the Supreme Court to pause a law that would ban the social media platform unless it's sold by its Chinese parent company, that's ByteDance. For more, let's bring in Bloomberg News Desk editor Jill Desis. And Jill, look, Trump has certainly had sort of a change of heart. He was at one stage wanting to ban it completely. He does seem to have become more favourable toward the app throughout the election cycle, where he said it gave him a bit of a boost. But what exactly is going on here?
Yeah, Val, I think as you noted, we've certainly seen a pretty long and winding road for TikTok in the U.S. The latest on that we have here is that Trump has ultimately filed sort of a motion to try to postpone this ban, which would go into effect January 19th, effectively requiring its Chinese parent ByteDance to either sell the app entirely or basically it would face a ban in the United States. What Trump is doing here is he's asking for a bit more time, a delay on this ban. He's making this argument that he ultimately thinks that he can negotiate a better deal. You may recall when all of the TikTok drama was going down during Trump's first term in office, when he was ultimately in favor of some kind of a ban or a sale. He had actually floated this idea that maybe the federal government should get a cut of whatever sale they'd help to orchestrate here. Of course, there's no sale that ultimately went through. Then you did have Oracle providing some cloud services to TikTok for data on U.S. customers, but didn't get much further than that. Obviously, the revival of these ban efforts during the Biden administration were successful in bringing us to this point where on January 19th, this law would go into effect. But as we're seeing here, Trump has obviously kind of changed tune over the course of his campaign. We've seen him kind of come down more critically on actually a lot of American media organizations, social media organizations such as Meta-owned Facebook and such. Obviously they banned him for a time after his election loss last time around. This time around, though, Trump talking here about freedom of speech issues that are present here. We'll have to see whether this delay actually happens, and then ultimately how Trump would choose to handle TikTok in his second term in office.
That was our news desk editor, Jill Deeses, there, and bringing you the latest as well from the Korean Transport Ministry briefing this morning. We're now hearing that Korea plans to conduct intensive aviation safety supervision for Jeju. That follows the weekend crash. We also had local media reporting this morning that a second Jeju Air flight was forced to return to the airport of departure due to the same landing gear issue that was found, of course, in that deadly crash over the weekend. So that is the latest there. We are seeing Jeju Air, of course, having quite a notable or noticeable stock market reaction as well so far this morning. We'll have more ahead. This is The China Show.
You're watching The China Show. We're checking in on how Hong Kong is faring pre-markets, seeing a bit of gains already at the early goings, and this is led by the tech stocks. We're seeing the Hang Seng Tech up for, I think, a fifth straight session if these gains hold till the end of today. This is also against the backdrop of some gains among consumer stocks. And of course, this is all coming after the pretty negative handover that we saw from Wall Street, which followed on from a Santa Claus rally. But this is, of course, in the context of thin liquidity. Belle?
Yeah, and Avril, just taking us back to those lines we're getting from the South Korea briefing on the deadly aviation crash over the weekend. We're now hearing that South Korea is considering a special inspection on Boeing 737-800 planes. This is the one that was involved in that deadly disaster over the weekend. Also, local media reporting this morning that another Jeju Air flight was forced to return after takeoff over a similar issue. Again, these are both Boeing 737-800 aircraft, now possibly looking to be investigated in Korea.
Welcome back. You're watching The China Show, and we're counting down to the open of markets. Of course, that bit of news of how Chinese authorities are urging local governments to offer handouts to people struggling with the cost of living, perhaps something that could figure into the trading session today. And we're going to be watching really closely those Chinese consumption stocks. But this is, of course, against the backdrop of no word just yet on whether we'll see a RRR reduction before the year is up. And this is after the PBOC governor did signal something, openness for that in that direction as well, Belle.
Yeah, well, there's certainly a lot of investors that are clamouring for easing. But taking a look at the open here, because we have, as you said, really seen a bit of a sentiment shift coming through in the last 20 minutes or so. Investors digesting these latest stimulus efforts from the central government in China. The CSI 300 has started the day negative today, but relatively flat as well. I mean, thin liquidity, that's something else that's going to be a hallmark of trading activity for the last week of 2024. What else we've got on tap this week? Yes, any sort of RRR cut, could that come through? We did have at least local media urging for that perhaps to be the case, if not this month, but over the coming or start to 2025. What else we're also watching for this week and actually tomorrow are the PMI figures from China as well, because they really should reinforce that narrative of a sluggish recovery that we're seeing in China. So that's the state of play. But we are seeing, again, that sort of sentiment shift because the CSI 300 has turned positive just in the early moments here. And as we see there, the People's Daily reporting saying that Governor Pan sees room for further or Pan rather, but sees room for further RRR cuts. So that's there. Let's take a look at what's happening in Hong Kong this morning as well, because the level that we're really tracking today is 20,000 for the Hang Seng. We are moving above that so far today. There are a couple of positive factors to that. A lot of green here that you're seeing across the screen, actually. But one of the things that we are watching for is in terms of the government measures, because we did actually have over the weekend the central government urging for direct cash handouts. We have seen these in the past, but direct cash handouts for the new year, so helping people that are really struggling with the cost of living. If you take a look at how markets are reacting to that, because consumer stocks, we actually had seen those gaining in pre-market trading so far this morning. Consumer staples, also consumer discretionary here, you are just seeing those moving higher across the board. What is actually leading the gains the most, though, so far are the IT names. And one of the ones we're tracking in particular is Xiaomi. It is actually just a day or two off reaching its highest level ever. But right now we're at levels we haven't seen going back to 2021, the start of 2021. So around 3-year highs for this name. But Xiaomi, a particular one to note this morning, if you can change on, because we actually have seen some reporting coming out saying that the company is looking at stepping up efforts to build larger AI models. And so these are some of the names that are associated with that effort. But yes, as I said, tech leading the gains so far. Avril, a very busy morning because we're also getting some lines on what's happening with the Korean political turmoil that's also really been casting a shadow over at stock markets and local currency.
Absolutely. I think among the worst performing, if not the worst performing in the region so far this year, taking along with it the Korean Yuan, Bell. But we're since hearing that the political crisis is really deepening here. In 2 weeks, 2 impeachments. The probe team is said to be seeking the arrest warrant for the South Korean President Yoon Suk-yeol. And this is following on from already the impeachment of the acting president a couple of days ago, Han Duck-soo. And this is as the lawmakers were really seeking to put some judges in place that would perhaps put in motion a way for finalizing, removing Yoon Suk-yeol from power. So this is what we're knowing so far, how the probe team is seeking the arrest warrant for the former Korean President Yoon Suk-yeol here, Belle.
All right, back to markets now. And China's campaign to revive stocks has made the yuan an unintended casualty, with record dividend payouts leading to outflows. For the details, let's bring in Bloomberg's Catherine Nye, who leads our Asia stocks coverage from Hong Kong. And Catherine, just tell us about this. I mean, that yuan already faces a number of pressures, so this is just sort of a further headwind, it seems, facing the currency.
Absolutely. China has been having this year-long campaign about how to boost shareholder returns, how to help, include corporate governance as a way to sort of stimulate its stock market. And, one of the ways in which it's encouraging companies to do so, listed firms to do so, is to increase dividend payouts, which we've seen sort of kind of pick up in the third and fourth quarter, particularly. And so in the fourth quarter, we're on track for, a record for the fourth quarter, and also in sort of expectations for the first quarter, another record. And so, there's just the mechanism of how to do this is that a lot of these companies are, listed in Hong Kong, but that they're, producing their the profits in the yuan. So therefore, putting additional pressure by selling yuan and buying Hong Kong, the dollar. And as a result, it's just another sort of headwind, as you mentioned, on top of the trade tensions and all of the other sort of woes for the currency.
Catherine, I mean, it's been quite a trying year for the currency, but also in focus is the top performing stock for China in 2024. This is an AI chip designer, Capricorn. What are you seeing in terms of the tailwinds carrying through into next year and the dynamics that have helped it along thus far?
Yeah, I think that if we can, as we're at the end of the year and we're sort of looking back and thinking about, reflections for 2024, I think one of the strongest ones is about just policy support. I mean, especially in the second half of the year, and the government has been pushing a lot in terms of wanting to support the local economy, wanting to support the market, wanting to sort of have stability and growth. And I think investors would, are always happy to hear that. And here's an example. I think Cambricon is an example. It's up, 380% so far this year, the best performer on the CSI. It's double, the second performer, second best performer. And here's an example of sort of like, just a company that's sort of within this sort of AI self-sufficiency sort of sector. China has been a little bit behind in terms of getting onto the AI bandwagon. It's lost, it didn't, get onto, get much of that rally, the uplift in global shares through the summer when we saw the likes of NVIDIA sort of really taking on a global stage. And they're a little bit behind on that technology front and as well as the chip side. So, China has been really sort of supporting the sector and wanting it to grow and wanting it to sort of be a market leader in that regard. So investors are taking heed to that and saying, hey, we see those efforts and they're really buying into this because they think that 2025 is going to have a lot more going for it.
All right, that was Bloomberg's Catherine Nye there, who leads our Asia stocks coverage in Hong Kong. And just thinking about, of course, one of the reasons why China's been so far behind in the AI race, and that does really speak to those trade tensions between the US and China and these efforts from the White House to restrict China's advancements in advanced technology. But how exactly that plays out into other sectors, of course, is going to be a big focus going into 2025. Let's bring in Sabrin Chaudhuri, Global Head of Commodities Analysis at BMI. And Sabrin, of course, from where you sit, you're more focused on the metals outlook, and base metals are going to be one of the key areas to watch, given you've got not just that prospect for further trade turmoil, you've also seen the expectations for further stimulus from China playing into the picture to counteract not only a weak economy, but a new President Trump back in the White House. What are you seeing for the next few months?
For the next few months, we do expect commodities in general to remain under pressure across the board. This is because of US dollar strength the moment Donald Trump was elected, and the mainland Chinese economy has continued to disappoint market participants. Despite announcements of various kinds of stimulus measures, we haven't really seen a strong physical demand recovery in China, and this is set to persist over 2025. So over the next few months, commodities across the board will remain under pressure.
And so under pressure, though, but the key dynamic, do you think, for that is really the outlook for a stronger dollar?
So commodities priced in the greenback do have a inverse relationship with the US dollar. So yes, the main driving force of weaker commodity prices this year will be the US dollar. But we also have a host of geopolitical uncertainty that is dampening sentiment for market participants, trade tensions coming up most likely. We also have geopolitical uncertainties across the Middle East as well, Russia, Ukraine. So these all dampen sentiment in the market for commodities, other than gold, of course. And so these are the main things: US dollar, mainland Chinese economy weakness. These are the ones to drive weakness across the board.
Sabrin, can you talk to us about the dynamics as we await for support from Chinese authorities for the economy, given that how so far it's been coming in a pretty piecemeal approach? How is that going to influence the volatility we see, and potentially which in the complex will be the most vulnerable to this?
So in terms of uncertainties, perhaps I would like to raise gold. Gold has really thrived in terms of geopolitical uncertainty due to its characteristic as a safe haven asset last year. It has reached, record highs. Right now, it's still very, very elevated thanks to all the uncertainties. There's uncertainty about what kind of economic and trade policies Donald Trump is going to enforce starting January. There's also uncertainties globally, as I spoke earlier. So uncertainties definitely boost demand for gold. In terms of which commodity would be most vulnerable or for the downside, that I would say copper. A lot of people market participants do think of copper as, an indicator of global economic health, uncertainty, etc. So copper has been pretty beat over the last 2-3 months. And over the next couple of months as well, copper, oil, these commodities are said to be facing quite a bit of a bleak outlook due to poor sentiment globally. But at the same time, when I'm speaking about copper, I do want to highlight that copper is used in the green transition. And so copper's outlook overall in the long term is definitely strong compared to other metals that are not used in the green transition.
Right, part of that decarbonization initiative. But when you're also looking at the year ahead, the concern for investors, for businesses, is tariffs, the threat of that. How are you seeing an element perhaps in stockpiling underway?
So in terms of tariffs, I think the commodity that will be affected most is likely steel. So the last time tariffs were enforced from the U.S. onto Chinese steel, U.S. steel prices rose significantly compared to steel prices in China, obviously, because, Chinese exports will be limited. But then again, China has redirected a lot of its exports outside of the U.S. So a lot of it goes to Southeast Asia, to India, etc. So I would say for steel, the market participants would have to look closely at steel prices. U.S. steel prices are likely to be higher, whereas Chinese steel prices will be lower.
And trade tensions, of course, you get soft commodities caught up in that as well. But if you look at the trading action this year, it's been bullish for cocoa, for coffee, but a little bit weaker for grains, for oilseeds. What's your expectations around soft commodities?
So for soft commodities as well, we do expect slight weakening this year, and that's mainly due to supply. We expect global supply to be healthy. We do not expect any uncertain weather events like La Nina or El Nino that we had over the last couple of years. So 2025 is set to be pretty healthy in terms of food supply. So soft commodity prices will also be slightly weaker compared to last year.
Right, we've gone from food inflation to talking about food disinflation. Sabrine, good to chat with you. Thanks so much for sharing your outlook. Sabrine Chowdhury, Global Head of Commodities Analysis at BMI. And if you're a Bloomberg subscriber, you can catch up with all our interviews by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and our guests during our live shows. Check it out at TV Go. Plenty more ahead. This is Bloomberg.
Today, America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured not by words, but by his deeds.
That was President Joe Biden there on the legacy of Jimmy Carter after the 39th US president died at the age of 100 at his home in Plains, Georgia. And Carter's presidency was marked by significant achievements, including brokering a peace accord between Israel and Egypt. Bloomberg's David Weston takes a look back at his life and his legacy.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term, but I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
Welcome back. Here are some of the major political stories that we're following this morning. And Elon Musk has repeated his support for the far-right Alternative for Germany, or AfD. In a newspaper opinion piece published Saturday, the world's richest person said the party represents a political realism that resonates with many Germans who feel their concerns are ignored by the establishment. Musk has extensive business interests in Germany, including a Tesla factory near Berlin. The US says it's planning to take further action to curb cyber attacks from China. That's after the White House identified a 9th telecommunications company impacted by a wide-ranging Chinese espionage effort. The Biden administration is also blaming companies that were slow to identify the attack, citing a lack of basic cybersecurity measures. The Chinese military says it held patrols on Sunday over waters and airspace of the South China Sea. The activity was close to Huangnan Island, also known as the Scarborough Shoal, which is claimed by both China and the Philippines. A military statement says patrols have been strengthened in December. North Korea's ruling party has reportedly used its annual year-end meeting to adopt what it calls the strongest response strategy toward the US. South Korea's Yonhap cites North Korea's state-run media saying cooperation between Seoul, Washington and Tokyo is leading to the creation of an invasive nuclear military bloc. The meeting also confirmed several cabinet-level personnel changes.
And we're keeping an eye as well on how South Korea markets are faring amid the deepening political crisis in the country. Since hearing in the past hour that the probe team is seeking the arrest warrant for the South Korean President Yuan, a former president. And really, the stock market has been bearing the brunt of the political uncertainty in the country since the start of December. And I think it's already the worst performing in the region to date. We've been seeing some recovery recovery in equities, though, for the past couple of sessions. Today, the Kospi is continuing a bit of that, about 0.9% stronger in the morning session, seeing the Kosdaq that has also been declining, I think about 20+% so far. That has also been clocking fairly solid gains. Of course, that is the smaller cap index. But really, the interaction that we saw was against the backdrop of that stronger dollar. The Korean won was already on the back foot for much of the year. That greenback strength story and exacerbated by the political crisis in the country, contributing to what we're seeing in the Korean won. And that's being reflected there. As you can see, the stocks, bonds, currencies in Korea has really been getting hammered, among the worst performing assets in Asia, Belle.
All right, that's sort of the bad news. Let's talk about what's happening that's good in markets this morning, and that is AI-related stocks in China this morning. So Xiaomi, you can see there, it's really getting very close to a fresh record high for the company. But essentially, local media is saying that the company is looking at stepping up efforts to build large AI models. So we are seeing names that are linked to AI and the build-out of this infrastructure also gaining in tandem. What else we're tracking this morning is a bit of M&A activity over in Taiwan this morning, because we've got Kingstown bank shares that are gaining this morning, up nearly 7% at one point. But we have seen Sinopac Financial, you can see they're a little bit weaker, agreeing to buy the company at $53.50 a share. So we're leaving that there. We'll have more details just ahead of all of the market activity. You're watching The China Show. Well, welcome back to The China Show, taking a look at how the CSI 300 is faring half an hour into the session. And actually, you know what, it could be Chinese equities that help the broader benchmark to reverse what's looking to be the first loss in 6 sessions, because we're seeing that they're gaining 0.6%. And again, that broader benchmark just moving from weaker territory to now trend fairly stable, Avril.
Yeah, it's interesting as well how we're seeing not just Chinese stocks advancing today. I think some of it also coming from South Korea, where we're seeing a rebound that's extended from last week. And of course, this is against the backdrop of the deepening political crisis in the country on a day where, you know, Japan seeing its last trading day of the year, down about 0.6%, a bit of profit taking, I suppose. Australia also in negative territory. And this is, as you alluded to earlier, with the region's benchmark showing those slight declines. And following on from the negative handover from Wall Street last week, noting as well that I think the Korean won is managing to snap its losing streak, advancing as much as, well, a fair bit, I think, pausing its weakness, at least I should say. And we're also keeping a close watch in South Korea and the stock of Jeju Air. And this is following on from really this devastating tragedy. We've seen that worst air incident in South Korea, with the deadliest death toll in aviation incident, down 8% at the moment, Jeju Air stock there.
Yeah, let's get more on that now, because as you said, we have been having that Transport Ministry briefing this morning and just learning more details about exactly what took place. Also a separate incident that took place this morning with another Jeju aircraft. But let's bring in our Asia Transport reporter, Danny Lee, who's joining us. And Danny, bring us up to speed here, because we're hearing that there could be special inspections, for instance, of these specific Boeing 737-800 planes, that the US could be getting involved. What exactly is happening here?
Yeah, so some of the key lines we've learned from this morning. So from the authority side, they are considering special inspections of the the Boeing 737-800 aircraft. Over 100 of these aircraft are operated by the South Korean carriers in the country at the moment. So that's something that they're considering. It sounds fairly standard. There is a lot of focus, not just from the authorities, but from ordinary citizens. And so to a degree, I'm sure there will be a level of action to give some assurance that these planes are absolutely safe. There is also the part that the US will also be involved in this investigation, which is pretty common given this is a US-made aircraft as well. But for the investigation, which is just 24 hours old or so, the fact that authorities are looking at what impact a bird strike had on this crash, given the fact that there was a Mayday warning in the minutes before the crash, and then also the warnings from the airport that there could be bird strikes. And so from that to then the actions of the pilot and then the footage we saw of a belly landing, a high-speed belly landing on the airport runway, sliding at high speed into an embankment, and this fiery crash, like all the different things that could have potentially happened step by step in the lead up to this accident, clearly the worst accident for South Korea in its aviation history ever, and clearly the worst this decade.
Danny, as Belle was alluding to earlier, we're also hearing about that second Jeju Air jet suffering a landing gear issue. What do we know about this? I know it's early days, but are there any other details that can be gleaned from this potentially?
Well, Jeju Air is not commenting on this latest incident with one of its aircraft, another of its aircraft. And look, it is the same type of aircraft and very similar, it seems, landing gear issue, but to what extent it's similar remains to be seen. However, there is so much focus on Jeju Air. It's a carrier that has a lot of focus on them, so any kind of incident, no matter how small, will be highlighted, and given what has just happened in the last 24 hours, it is inevitable. But the focus does remain on this ongoing investigation into this crash and trying to ascertain quite quickly to what could be the probable causes into all of this.
Yeah, and actually we can just show, so we are showing some live pictures there, Danny, of that Transportation Ministry briefing that's underway, and again, just learning all the different details of this. But to put it in context, sort of on a global scale, you're talking about the worst aircraft disaster we've seen this decade, but how common are incidents like these, and do we need to be concerned if it is something to do with, for instance, birds? Is that something that you need to be concerned about overall?
I don't think members of the public, should be too concerned. Bird strikes are very common, and aircraft are designed with multiple redundancies, and particularly with, for example, the aircraft engines, which can fly on one engine and for quite a considerable time. And as we've seen with bird strikes, the most famous case being the Miracle on the Hudson in New York, when there was that bird strike just after takeoff on the US Airways aircraft. And so, there will be so much focus, but given that on this grim milestone of this being the worst air accident for in South Korea in aviation, it's taken 20 years to supersede the previous one. So it just goes to show that aviation, not just in the country, in South Korea, being very safe, but overall still historically very, very safe, and considering we've just come off 2023 being the best year for civil aviation with no large major crashes.
Certainly, aviation safety is really in the spotlight, despite this solid track record that you've been alluding to, Danny. Thanks very much, Asia Transport reporter Danny Lee. Still with South Korea, where investigators are looking into President Yoon Suk-yeol's declaration of martial law. They're seeking an arrest warrant for the now impeached leader. Bloomberg's Yoo Lee has been tracking all the developments from Seoul. So, Yoo, what is the latest? What are we hearing about what the probe team is trying to achieve here?
So this is unprecedented move in South Korea's history for any investigators to seek arrest warrant on a president. Although this was expected because the impeached leader Yoon has been defying the the request to appear for questioning by the Joint Investigation Team 3 times. However, it's still the uncertainties still remain because we don't know whether the court will issue the arrest warrant, and we also don't know, even if the arrest warrant is issued, whether investigators will be able to execute the arrest of embattled leader Yuan. There are questions and uncertainty still lingering, but this shows the challenges and the difficulties that the investigators are facing as they try to probe the insurrection charge on Yuan. Now, Yuan's legal representative has been telling reporters that it's going to question whether the probe team has authority to investigate insurrection charges. So it looks like that will be another front that the Yuan's lawyer will be fighting.
And it's not just on that legal front. I mean, what's also happening in Parliament, because we've seen a second president or leader now being impeached in just 2 weeks. What exactly is happening there?
That's right. So this is another unprecedented event in South Korea. We have seen 2 leaders impeached in just 2 weeks. So now, after the acting president Han Duck-soo, who is originally the prime minister, has been impeached last Friday, now we have the finance minister Choi Sang-mo acting as the interim leader. That actually adds a lot of challenges because Choi will have several hats, including the role of the finance minister, acting prime minister, and acting president. And now, after the deadly Jeju plane crash, he's also overseeing the disaster control tower. So there are a lot of concerns whether whether Choi will be able to handle all these roles, especially at this really important time for the South Korea's politics and history.
Yu-kyung, want to ask you as well about the conversations really that you're having with investors, because we've seen that the political turmoil has really dented the appeal of Korean equities. We've seen pressure as well on the Korean won. What is the outlook for 2025, and what are you hearing from investors as well? Are they likely to be tempted back in, or do you think it's just a case of steer clear for now?
So I think a lot of investors are now staying away from adding actively South Korean assets at the moment until the political uncertainty clears and we know who will be in charge of the state affairs for South Korea. Now, the benchmark Kospi has been losing on the losing streak for 6 straight months, and that is the longest losing streak since 2008. And even though the valuation has become really cheap for the South Korean equities after the 6 months straight of losses, I don't really hear from investors saying this is they're going to dip buy the local equities. Rather than dip buying the index, they are looking for the more of a stock picking for the individual stocks that could benefit, because South Korean financial markets still face a lot of headwinds, not only the political uncertainties, but there will be also the tariff policy uncertainties from the U.S. and also China's economic slowdown. So this is not the only challenges that the South Korean market is facing, but we have a lot of headwinds ahead for the 2025 for the South Korean market.
Yeah, multiple challenges on multiple fronts. We'll be tracking it all. That was Bloomberg's Yu-kyung Lee there in Seoul. And still ahead on the China show, we'll hear why Fidelity International expects more stimulus from the Chinese government until stable growth is achieved. Their investment playbook for the new year is next. You're watching Bloomberg. Taking a look at what's happening in the debt space this morning. You're seeing yields here looking relatively unchanged so far. The biggest moves in the Aussie 10-year there, up 8 basis points. But broadly, when you take a look across the week, it's going to be pretty slim pickings, thin trading volumes. A lot of traders are away from their desks this morning. But really what's sort of been driving the dynamic of this is the moves that we've had in treasuries, because we're very close now to erasing all of the gains made so far this year. And again, against that backdrop, when you've got not many economic data releases scheduled this week, Fed Reserve speakers as well, not going to be hearing from those, we could actually erase all of the gains made over the past 12 months. Let's bring in Vanessa Chan here, head of Asia Fixed Income Investment Directing at Fidelity International. And Vanessa, I'll start on that point because it seems like investors are growing a little bit more wary of what Donald Trump will mean going into the White House next year. There's also the risk that we get a much shallower easing cycle as well off the back of tariffs, for instance, that could reignite inflationary concerns as well. So what is your sort of expectation for where we go from here?
Yeah, I think if you we'll start from the big picture. What's likely to happen is that once Trump come in to the White House, there could be a period of time where there will be a lot more headline news related to tariff and particularly on negotiation. This is probably on the back of what we have seen back in 2018 between the kind of different countries on tariff negotiation. The second point is that if the direction of travel is going to have an increased tariff, it could also potentially means that there would be a little bit more kind of inflationary impact in the U.S. And that would also mean that the terminal rate on the U.S. rates could probably be slightly different compared to what was the expectation of beginning of this year in 2024 as well.
And so what's your expectation around easing? I mean, I think going into this year, we had sort of this prediction that a lot of central banks would be cutting, not just the Fed, but many in Asia. Do you see that sort of narrative? I mean, it's already been changing, but do you see it really shifting again?
Yeah, I think one of the things we need to acknowledge in regards to Asia is that for 2024, it continued to be very strong or kind of stable in terms of the growth on the whole region. Second layer is that the inflation of Asian countries is kind of within the targets. So there's definitely possibility for some of the central bank to start thinking about easing. On the other side, we also need to be cognizant about the potential tariff impact on some of the export-orientated Asian countries. And what does all these kind of bring together is that we're probably likely to see a little bit more divergences when it comes to the Asian central bank policies coming towards on the easing or holding on the rates. And of course, there's also the other factors that we'll need to consider for Asia economies or for some extended to EM countries is where the U.S. rates are heading as well. So I think it's a little bit of kind of watching out, especially on the divergences of the economic performances for 2025.
And so if you do see that sort of divergence, what is your advice when it comes to either investment recommendations or building a portfolio? What are you actually telling clients?
I think if we think about fixed income particularly, what we've seen is that the all-in yield are very attractive. And I think that's probably well acknowledged, not just on Asia, but across on the fixed income space. The second is that spreads are very tight, and that's as historical tights in a lot of different markets as well. So other than just thinking about the all-in yield, I think it's also important for investors to balance the kind of risk and reward approach, particularly on the downside protection, given the spreads levels are quite tight at the moment. For Asia fixed income, I think we need to kind of rewind a little bit to see what have happened for the past couple of years. We see fallen angel risk have picked up. We've also see higher default rate as well. But as we move into 2025, this is probably likely to kind of gradually normalize, which means that the overall credit fundamentals could potentially be a lot more solid compared to a couple of years ago, where investors can come in to look for the kind of income generation whilst being mindful of credit selections within the Asian economies, particularly when it comes to specific sectors that is more cyclical, sectors that's more export-driven will probably be something that investors need to be a little bit more mindful when thinking about those sectors.
So when it comes to sort of downside risk protection, do you look at investment grade then, or are you still open to high yield?
Yeah, I think it's more across the spectrum. We looking at more high quality credits credits that have strong fundamentals, sound business model, good corporate governance, and also manage the balance sheet or the liquidity quite well. That's probably will be the category where you will be comfortable thinking about it as a income proportion, capturing the all-in yield, if you would, probably on the shorter duration side to minimize the kind of volatility when it comes to the interest rates. Whereas if you kind of go to the high yield space, I think what's the difference now is that historically we have a much larger influences on China property on the Asian high yield. It used to be 20-30% of the index or the market, and now it's probably around 5 to 6%. So the kind of bad apples, if you would, is probably kind of being cleared out in the Asian high yield, where you still have a fairly diversified Asian fixed income space where you can think about diversification as well. So it really depends on the risk appetite, but if you're just looking for the kind of income generation and lesser about the kind of total return, you're probably thinking about investment grade. But if you wanted to have a little bit more expression when it comes to credit selection, then maybe thinking about Asian high yield could also be interesting as well.
But you're not looking at this point, do you think, to even if you are sort of wanting to take on a level of risk as an investor or wanting to take on a bit more risk, China property, is it still too soon, do you think?
I think I think it's interesting. I think there's still more information or more data needs to come through, particularly in relations to the recovery or stabilization of the China property market. We've seen some of the contractor sales that come through that is a little bit more showing signs of stabilization. Of course, we're also waiting for additional policy could come through and basically trying to reignite some of the demand coming from the China property purchase side of it. So it's a little bit of kind of wait and see, monitoring the recovery on the physical market. Second layer is kind of going back into look at the individual companies to see what's their plan in terms of refinancing as well. Having said that, there are pockets or various credit selections that could be done to find some of the potential interesting allocation on property, but it will not be the main driver or the main driver of the total return for the Asia fixed income asset class.
What about, last question, what about the currency risk here? Because we've seen a lot of central banks in Asia really looking to protect their local currencies from what has been that king dollar, and that is set to persist into 2025. Are there opportunities when it comes to playing that interest rate differential as well?
Yeah, I think that's a very good question. I think if you look at 2024, if you have worked through some of the interest rate dynamics, there are opportunities. But as a fixed income investors, a lot of the focus will probably still on the credit allocation and then probably duration. So the interest rate differential will probably be a much smaller part when it comes to the overall portfolio allocation. Whilst if you're looking at those dynamics, it's probably looking for the divergences that I talked about earlier on between the central banks when it comes to the rate cut cycles as well as how they manage the foreign currency as well.
All right, Vanessa, thanks very much for your time this morning. Vanessa Chan there, Head of Asian Fixed Income Investment Directing at Fidelity International. And we'll have plenty more ahead. This is Bloomberg. Welcome back. Here are some of the major corporate stories we're tracking this morning. And the Japanese supplier of chip package substrates used in semiconductors made by NVIDIA says it may need to increase production capacity to keep up with demand. iBiden CEO Koji Kawashima told us exclusively that sales of the AIU substrates are robust as the company builds a new factory in central Japan. He also gave us the outlook for another key US customer.
We have a very long relationship with Intel, and we have been doing business with them for about 30 years now. So there is no doubt that Intel is one of our important customers. We will continue to support Intel's recovery.
Newman's Health Food is offering 250 million shares in a Hong Kong IPO that could raise as much as $35.2 million US. A stock exchange filing shows a price range of 80 Hong Kong cents to up to $1.09. Trading is expected to begin on January 10. And taking a look at some of the market activity this morning, because there's actually IPO news that is also driving sentiment for some of the Honor-linked names this morning. So this is the Chinese phone maker Honor. It's being spun out of Huawei, and so that split off as now being complete, or it will. And so the company is saying it's going to start its IPO process in due time. So the overhaul of the shareholder structure has just been finished. We got that company statement over the weekend, and now Honor could be looking to list in Hong Kong over the course possibly of 2025. And so you're already seeing this market reaction, these Honor device-related stocks that are moving on those supposed or reported plans. What else we're tracking in the session so far are some of the EV names in China as well. There is a story out this morning that China's government has posted that it's looking for essentially for car purchases that are made for the government, they're all going to be NEVs moving forward, possibly. That's according to an MOF posting on its website. We aren't seeing too much of a market reaction so far, but of course, electricity or NEVs in China, we actually have seen some reporting as well earlier talking about margins, and they are really being squeezed for car makers in China as there is that intense competition between them as well. Lastly, just taking a quick look at what's happening with shares of Jeju Air this morning, because we have seen, firstly, an incident over the weekend. Of course, the worst ever South Korean air accident, killing 179 people. This morning as well, another Jeju Air jet forced to turn back. That was according to local media reporting. But certainly we are seeing a market reaction today, given these news developments. It's 11:29 a.m. in Tokyo this morning, where Japanese traders are just about to go onto their lunch breaks. This is the setup for one of the last trading days for 2024. And actually, as we go into the lunch break, there's some weakness here across the screen. Traders, they're looking perhaps to secure some profits. We've had 5 straight days of gains. Bank shares as well, we've actually seen those looking to gain this morning, but supported by higher US yields. So tech companies and service providers are actually contributing the most to the drop so far today. But again, it kind of tracks what we had for Wall Street, at least on Friday, where we saw the Nasdaq declining by more than 1%. But it has, of course, been a very historic, dramatic year for Japanese markets. You've had the chaos from the BOJ's hawkish turn to big M&A developments, a new prime minister. Let's get more with our Japan stocks reporter, Momoko Yokoyama, joining us now from Tokyo. Momo, what is the expectation? I mean, we've just been looking at sort of some of the weakness there, but do we end the day like this? Do we end 2024 in this sort of vein as well?
So Nikkei is falling on its final trading day of the year, but this is really following the U.S. market closing lower. So the market is still showing quite resilience as we head to the year end, sort of following the seasonality to late rise in the final days of trading. Last week, of course, it was helped by the deal between Nissan and Honda, as well as some M&A deals that came from Nidec. So after the year, that's so all-time high, record high, and the sell-off in August, the Nikkei is now back at 40,000 yen level, about 20% higher than the beginning of the year.
So, yeah, I mean, we're looking at the Nikkei 225 up nearly 20% year to date. It has been one of the market darlings as well. Do we sort of look the same then for 2025?
So as for 2025, when the market reopens on January 6th, we might see some cautious attitude among investors. And this is, of course, we expect the comeback of Trump to White House. But even then, there is some optimism coming from foreign investors. They are sort of starting to look for diversification of their portfolio as they now concentrate a lot on U.S. equities. And on top of that, Goldman Sachs strategist now sees the current yen level actually provides a sweet spot for foreign investors to coming in. This is because they see a limited risk of yen falling far below 160. That provides reduced risk of dollar value falling later because of the yen weakness. So overall, I guess the Japanese stock is...
Finish your thought, sorry.
Okay, sorry. So overall, the Japanese market is likely to start the new year with some level of optimism coming from foreign investors.
And then you mentioned the yen there. What's the outlook then for 2025? Because we've been speaking a lot with investors about dollar strength is set to persist. So what does that mean for the Japanese currency?
So some strategists see that the yen falling beyond 160 is quite unlikely. This is because that they expect some forms of intervention coming from Japanese authorities if it falls sharply below 160. And last week we saw Japanese finance minister sending warnings against the current yen weakness. But at the same time, especially after the central bank meetings this month in the U.S. and Japan, it's likely that the weakness might continue to some level. Federal Reserve now sees fewer rate cuts going into 2025, and Bank of Japan continue to take more cautious approach for the next rate hike. So the interest rate gap will narrow, but the pace of narrowing is now looking a lot slower compared to earlier in the year.
All right, that was our Japan stocks reporter, Momoko Yokoyama, there joining us this morning and taking a look more broadly what's happening in the Asian equities landscape today, because we actually have seen, given some gains, early gains that we had in Chinese equities, we saw the MSCI Asia Pacific Index just moving up to sort of flat. It has given up that. It's now off the highs of the day, back down 0.3%. It has been sort of a lead-in, of course, from what we had from Wall Street on Friday. You're seeing US futures there still fractionally under pressure. But again, they ended the week in the red. So you're snapping what's been a 5 straight day advance. Let's get more on the outlook for emerging market bonds and currencies, because we're entering a period of increasing risk. And due to what Momoko was just telling us there for Japan, but a combination of a hawkish leading Fed, uncertainty in US economic policy, a tepid Chinese recovery. That's according to Bloomberg MLI strategist Mary Nicola, who joins us now from Singapore. So these are just sort of a confluence of threats, it seems, to the EM trading landscape.
Yeah, absolutely. So, we know that for emerging markets, the ideal environment is when you see China's growth really strong, U.S. growth holding up, and then, of course, you see the Fed cutting rates. A lot of these have shifted. So the recovery in China is becoming a little bit more tenuous. The U.S. recovery is holding up, but then you also have a much more cautious Fed. So the outlook for rate cuts is not as aggressive as the markets would initially like, nor is it as aggressive as you would like as an EM investor either. So the fact that you're going to have the U.S. dollar stronger, rates higher for longer, that all poses significant threats and headwinds for emerging markets. Then it becomes an even bigger threat when you have weak external and fiscal balances. A lot of that we can think of, if you recall what we saw during the taper tantrum, and countries were under scrutiny when they had weak fiscal accounts, so a high fiscal deficit and a current account deficit as well. And so those countries, the example of the Fragile Five, they came under scrutiny, and the markets really hammered them for the fact that they didn't keep fiscal discipline in order. Now we go back to where we are today, and of course fiscal discipline hasn't been in order, especially after COVID. The fiscal accounts haven't come back to where they should be or to a sustainable path. And I think the biggest example of where we see the scrutiny and and countries coming under scrutiny has been in Brazil this year. So the real has suffered nearly 21%, is down nearly 21% against the dollar on the fact that their fiscal deficit isn't coming into any sort of sustainable path, and they've been suffering the ramifications of it. And I think that trend will continue into 2025.
What about the outlook in China? Because yeah, we have the expectation for more stimulus and further easing as well to try and boost consumption and reignite economic growth in the country. But it is still putting pressure on countries as far away as Brazil, for instance. So how is that also going to sort of worsen the picture?
Yeah, and that's the key thing. So if we recall back in 2010, after the global financial crisis, and we saw the recovery across emerging markets was really quite strong as a result of China's all-out package and support for the economy and boosting the economy after the global financial crisis. We don't have that same support this time around. So it's compounding the effects on emerging markets. A lot of these big countries are, China is a big trading partner. Another one is Europe as well. Germany is also struggling, and even emerging market aside, but you just see that the ramifications are quite widespread. When China is weak, then it has an impact not only on a big country like Germany, but of course on a country like Brazil, because of course these are big trading partners to China, and of course it's going to suffer the ramifications. So if there's not growth from the domestic side, there's not support for growth from the external side, with China's recovery, we can see that emerging markets are going to continue to struggle. Then, of course, we've got the picture of what's going to happen in the States with U.S. trade policy, the looming pressure and expectations of tariffs, or the worsening of tensions between the U.S. and China. That, of course, has repercussions not only on those two individual countries, but of course on the broader landscape for trade, and of course for countries that are exposed to trade. So what we'll see is the fact that if you are exposed, or if you haven't kept your books in order, like the ones in Brazil, like Turkey, like South Africa, they come under further scrutiny as a result, because of you need to have a bit stronger landscape because of on the domestic side, because externally you just don't have that support anymore.
Let's talk about investment themes for next year as well, because I think if there's anything that's sort of become clear in Asia this year, or one of the things that's become clear in Asia this year, is that you're seeing a real divergence between who's most exposed to AI. And one way to express that, of course, is what you see between Korea and Taiwan that were once lumped together. Well, you've seen really the Taiwan benchmark far outpacing what we see for the Kosdaq, for instance. Today in the session, you've got Xiaomi-related shares that are rising on an AI-related report. You've got Capricorn Technologies, for instance, one of the best performing stocks in China this year. That's another AI-related play. Is that where investors are going to be looking to over the coming few months as well?
Yeah, a lot of the AI play is likely to continue into 2025, and that's still going to be very dependent on what we're seeing from U.S. earnings and from AI support from U.S. companies. It still is going to largely see if earnings in the U.S. continue to show the robustness we've seen in 2024, then that's going to help the AI theme in Asia. What we've seen is that dichotomy, as you pointed out, Annabelle, between Korea and Taiwan, but that's also been the result of the lagging picture that we've seen in Samsung versus TSMC. And of course, the struggles of the Kospi has extended beyond what we saw from the political side. The political woes were just exacerbated the conditions for the Kospi. But underlying, we did have the underperformance of Samsung versus what we saw in TSMC, and they just haven't haven't been keeping up the pace, and that's also been a key drag on the picture there. So I think obviously for Korea, again, it's a small open economy that's going to be exposed to trade. Same thing with Taiwan as well. But of course, we know the Korean won often acts as a barometer for risk appetite because of what a small open economy it is. And so if we look at what the headwinds that might present from U.S. trade policy, it could actually worsen the outlook for the Korean won heading into 2025 as well. So the AI theme does continue and does prevail, but a lot of it will depend on what the picture and the outlook is for U.S. AI companies as well.
Yeah, we're just showing a graphic there of Cambricon Technologies, Mary, up more than 400% so far this year. So really one of the top stocks in the mainland for 2024. But that was Bloomberg MLive strategist Mary Nicola there in Singapore. And you can get more or follow more on this story, all of the day's trading on our Markets Live blog. That's on Bloomberg at MLive Go. You can also get a market rundown in one click. There's commentary, there's analysis from Bloomberg's expert editors. So you can find out what's affecting your investments right now. We'll have plenty more ahead. This is Bloomberg.
Today, America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured not by words, but by his deeds.
Bloomberg's David Weston takes a look back at his life and his legacy.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he also had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term, but I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
Well, let's bring in our China correspondent, MIM Low in Hong Kong. And MIM, we spoke a lot about how Jimmy Carter shifted foreign policies, not just in the Middle East, but he also made big efforts to normalize relations with Beijing, or to continue those efforts that had already been started before he came into office. But what has been the response then from the Chinese government to his passing this morning?
We haven't heard any official response yet, but we are monitoring very closely the Ministry of Foreign Affairs press briefing this afternoon at 3 p.m. local time, where we might hear some sort of statement from the ministry to really commemorate his passing, because, as you said, he is an extremely instrumental figure, someone representing an older generation of U.S. leaders that were very instrumental in building up U.S.-China relations, like Richard Nixon, Henry Kissinger. Richard Nixon was the first president to visit China in 1972, but it was really Jimmy Carter who established formal diplomatic ties with China in 1978, essentially ending diplomatic relations with the Republic of China government in Taipei at that time. And a month later, he hosted Deng Xiaoping, then paramount leader of China, in the U.S., the highest ranking Chinese official to be hosted in the White House at that time. And that was extremely critical because it paved the way for a series of agreements spanning science and tech, education, commerce, and it really paved the way for official exchanges between the two sides and for the two countries to set up embassies in each other's capitals. So Jimmy Carter, in more recent years, in 2018, for example, as he reflected over the course of his career, he said that building up U.S.-China relations was one of his proudest achievements as president.
And he's someone that leaves a big legacy developed in his life after office as well. What are the kinds of contributions that Jimmy Carter made to Washington-Beijing ties even after he stepped down as president?
Yes, it's interesting that Jimmy Carter actually didn't visit China during his time in office, but after he stepped down, he visited China more than 10 times in nearly 30 years, and he's one of those U.S. presidents who have met with nearly every significant Chinese leader, from Hu Jintao, Jiang Zemin to President Xi Jinping. And at the 30th anniversary of U.S.-China relations, President Hu hosted him in Beijing, and I want to read to you what President Hu said at the time, because it really shows you how friendly the two sides were. He said, "As old friends of the Chinese people, you played an important role in establishing China-U.S. ties and witnessed this historic decision." And he said, for a long time, whether in office or retired, you made unremitting efforts in building the friendship between the two sides, and I highly appreciate that. And at the 40th anniversary of U.S.-China relations, Jimmy Carter actually warned against a brewing modern Cold War between U.S. and China if both sides continue to perceive each other as threats. So he really is that voice of moderation amid this souring political climate.
That's our China correspondent there, MIM Low, and we'll have plenty more ahead. This is Bloomberg. Taking a look at markets this morning, and Jeju Air is one of the names we're tracking in particular. Of course, we did have the worst ever Korean accident over the weekend. A Boeing 737-800 aircraft operated by Jeju Air crashing, catching fire in South Korea, killing most of the 181 people on board. We have seen the market reaction to that. We've also heard from ministry officials this morning saying that they are looking perhaps into investigating that particular aircraft, and also a high level of watch is going to be put on Jeju Air in particular. We are going to leave that part there, but also taking a look at what's happening in Chinese equities today, because we have seen the CSI 300 sort of fluctuating so far in the session, but broadly it is managing to hold on to its gains of 0.5% at this point. Most of the main sectors are gaining today. Energy is in the lead here, up 1%. Consumer staples as well. We're continuing to track those names, given there is that possibility of cash handouts. Taking a look at the broader Asian benchmark today, we are under pressure, so snapping what has been 5 straight days of gains.